Hello, and welcome to the Joss Brown Podcast. With over 40 years of combined financial planning experience serving high net worth clients, we will discuss our favorite topics, concepts, and stories. Hello, and welcome back to the Joss Brown Podcast. I'm Deven Joss, and we have Dan Joss here today. Today's episode will be a little different. We're going to go over a short introduction of a series that we're going to do, three-part series on the three legs of retirement income. So what is this retirement income, the three legs? They call it the retirement income stool. And so we're going to do one episode for each of the legs. So Dan, you want to go into what each of those legs are?
Sure. The first one is Social Security. Everyone gets Social Security, and because it's arguably simple to apply for and to get, but complicated if you want to maximize the benefit to your goals and make those work together, it's worth spending some time talking about.
Yeah.
Lots of different options.
Yeah. Social Security can be pretty confusing. So many different options on when to take it, who gets the benefit, the spouse or the primary earner. Do you take it at 62 or 70, or can you get it beforehand? So there's so much that goes into it, and you can make a pretty big financial mistake if you decide on taking it at a different time. But there are a lot of factors that go into it. So,
Right, you've done some studying on Social Security.
Yeah, I took a Social Security course on what they call a registered Social Security analyst. It was about a 20-hour course. I had to pass an exam, but it was a cool experience. Got to learn a lot. So I've been helping with clients and analyzing when they should take Social Security.
Right, because if you take it early and you decide you wish you would have taken it later, which could be a couple $100,000 or more.
Yeah.
And if you're talking married couple doing the same thing without thinking about the long-term implications, it could be quite a sum of money.
Yeah, you can leave hundreds of thousands out on the table if you take it earlier.
all of the planning, you have to make assumptions.
Yeah.
Like how long you'll live, and what else? How long you'll live is the primary one.
Yeah. What other funding you have?
How will you keep earning up until when you begin taking Social Security? Should you do that? Should you pay the penalty and keep working while you're receiving Social Security? There's several things to talk about, and it's worth meeting with a professional, and it's also worth having another 15 or 20 minute discussion on itself.
We'll have our own episode for Social Security. So what is that second leg of the stool?
Employer-sponsored retirement plans.
Okay.
So there's two types: defined contribution and defined benefit plans. The traditional pension. Lots of options. Some you have to contribute to, some it's fully paid by the employer. When you retire, some people can get rollovers from their employer, some people could get deferred payout, survivor benefit options. It's worth talking with an advisor about for just the employer plan, and because there aren't as many pensions as there used to be, now there's more defined contribution plans where employees are adding to the 401k or the thrift savings plan or the 403b, and all of the investment options in there. Lots of putting the weight or the requirement of funding your own pension plan back onto the employee.
Yeah.
So it's worth talking about the options that each has and going through what that means.
Yeah, there's different strategies for how to invest those assets and how it works with your retirement and your other source of income.
And when to tap those.
Yeah, and when to tap, because there's rules.
And when you're required to tap those. And those rules have changed a few times over the last couple of years. And that leaves a third leg of the stool, which is personal savings.
Yep.
And so the personal savings is whatever is not the other two. So individual retirement accounts, annuities, just after-tax savings to a taxable investment account where there's some preferred tax benefits with long-term capital gains instead of ordinary income, individual Roth accounts, and even now inherited accounts are kind of in that camp of personal savings.
Yeah. Yeah, so when it comes to this three legs or retirement income stool. You kind of want it to be even. We do have some clients that are pension rich and some that have the social, well, I guess most of them will have Social Security eventually.
But they'll have it to different degrees.
Yeah. And then, of course, the personal savings. So there's the three legs, and you kind of want them to be even. And if they're not, then we can sort of help figure out what to do next.
Yeah, the more even they are, the more options you have
Yes.
in retirement.
Yeah.
Because the law will require you to do certain things.
Mm-hmm.
And you don't want to be forced into doing something you're not prepared to handle.
Yeah, you want the different options and flexibility when it comes to tapping or paying taxes here or not paying taxes there. So there's so many different options when it comes to the three retirements incomes. So yeah, we'll have an episode on each of those topics. So we look forward to seeing those episodes.
Great.
Thank you. Thank you for tuning in to today's episode of the Joss Brown Podcast. If you'd like to see more episodes, visit our website at jossbrown.com.